Well, we knew that high fuel prices was one of the major contributors to continually stubborn inflation, but data out today shows exactly how bad it is. Transport spending in August was up nearly a fifth across Australia compared to the same time last year, a 17% increase. Fuel was the major driver of that, with prices up 14% in August compared to a year ago. This comes out of the Australian Bureau of Statistics Household Spending Index, which is based on analysis of bank and card transactions. Overall household spending was up 5% year on year, but transport was far and away the biggest area of spending growth. The next biggest area was health, up 8%, and then dining, up 7%. And it's worth noting that doesn't necessarily mean people were eating out more. It's a reflection of what it costs to eat out now. Overall spending on essentials was up 9%, and discretionary spending was unsurprisingly flat. But the pertinent question here is, why have fuel prices increased so much? And of course, they've gone up even further since August. You're now paying up to $2.20 a litre at the Bowser. And the short answer to the question is that we've done it to ourselves. Thanks to green, climate change-driven policies being put forward by state and federal governments, we have cut our own oil supply and we've been left basically at the mercy of foreign countries. At the turn of the century, Australia had 8 oil refineries. By 2020, there were only 4, and 2 of them went offline within 4 months. The federal government committed $2.3 billion in 2021 to keep the last 2 refineries open until 2030, because without them, we'd be entirely reliant on foreign oil supplies. What happens beyond 2030, we don't know. According to Geoscience Australia, which is a government agency, only 15% of our oil refinery feedstock was domestically produced in 2020-21. More than 80% of what we produced that financial year was exported. And it's not that we don't have local oil available to us. Geoscience Australia says, quote, Australia has significant undiscovered, unconventional oil resources potential, including shale oil, tight oil, oil shale, and basin-centred natural gas liquids. Oil shale is the only unconventional oil resource that has been exploited to date. Currently, there is no commercial production of oil shale resources in Australia. It also says that Australia's domestic crude oil production continues to rapidly decline, and without new reserves, production will cease within 5 years. Australia produced 18.3 million fewer barrels of oil last year compared to 2021, down to 103.9 million barrels from 122.2 million the year before. The Australian Petroleum Production and Exploration Association says oil and gas exploration has fallen by more than 80% in the past decade. 4 companies, including Santos, abandoned plans in recent years to drill for oil in the Great Australian Bight after extreme pressure and protest from environmental groups. Now, all of this, of course, means we have less of our own fuel, so we have to import it. We've been a net importer of oil since the 80s, and the share of imported oil increases every year. And that leaves us at the whim of the Organisation of the Petroleum Exporting Countries, OPEC, which is a group of the world's largest oil-producing countries, including Saudi Arabia and the United Arab Emirates. Now, they sell us a shed load of oil, and they control a large section of the world's fuel market, which essentially means they get to dictate the value of oil. And that is exactly what they've been doing. OPEC is essentially a fuel cartel that exists to drive up the price of their product. And they've done that very effectively in recent months by cutting the production of oil, which of course means there's less oil available in the market. And by the simple laws of supply and demand, that drives up fuel prices. And poor schmucks like us, Australia, have no choice but to pay whatever OPEC tells us, because we produce less and less oil and we have very little in reserve. OPEC and its allies, including Russia, agreed to cut oil production by 3.66 million barrels a day in April. I spoke to Credit Suisse energy analyst Saul Kavonic when that decision was made, and this is what he had to say.
But what's very important and different here is the price point at which OPEC has made a cut is one of the highest on record. And the reason OPEC think they can cut supply even when prices are close to $80 is because Western nations, the OECD, most of the US, but including countries like Australia, have really dropped the ball on producing our own oil supply. So now we've really given the power back to the likes of OPEC, the Saudis, the Russians, who feel they can now have control and can squeeze prices. And we can't respond here in the West with more supply ourselves because we've implemented policies which make it a lot more difficult to bring on new oil supply and actually provide some competition with those OPEC nations.
And this is exactly the point. We've essentially backed ourselves into a corner by reducing our domestic oil production in the name of the environment and left ourselves vulnerable to international bullies. It's just stupid. It doesn't matter who's producing the oil, we all live in the same world. Environmental damage is environmental damage. Doesn't matter whether you dig it up and refine it in Saudi Arabia, it still gets burnt and pollutes the air in Australia. OPEC has progressively agreed to continue these cuts every month since May, and they now intend to keep them in place at least until the end of the year. Saudi Arabia added another voluntary cut of 1 million barrels a day in July, and last month decided to also continue that for the rest of the year. Saudi Arabian oil production is now at the lowest it's been in 2.5 years, and Russia has now banned the export of fuel because it has domestic shortages. And it's not just that we don't produce the stuff, we don't have any of it in storage either. Australia's been a member of the International Energy Agency since 1979, and under that agreement, we're meant to have 90 days' worth of oil in reserve. We haven't met that obligation since 2012, and it got as low as 45 days in 2017 and was 63 days last year. The US Strategic Petroleum Reserve is at its lowest point in 40 years. This is why we are paying so much for petrol. A cartel of Middle Eastern nations and their allies, including Russia, have us over a barrel, pardon the pun, because green policies have stopped us producing our own oil. Just as heavily subsidising renewables and making coal power uneconomic has led, of course, to higher power bills, green policies have led to higher fuel prices.
And it's been something that many in the oil and gas industry have been warning about for quite a number of years, but particularly the last few years, where we've seen climate change policy and particularly ESG pressures from investors, which have been abandoning support for new oil and gas. You know, you don't have to look much further than obviously here at home in Australia, where over the last few months we've seen a lot of positive rhetoric supporting the gas sector from the government, but actions speak louder than words. And all the actions we're seeing is essentially a battle where the government is hurting the gas and oil industry across multiple fronts. And in this environment, if you're a big oil and gas investor, you're simply saying, look, it's too hard to invest in places like Australia, and also quite a lot of cross-border issues within states in the United States, and you put your capital elsewhere. And unfortunately, even Western capital is moving away from the sector, and that's leaving all the investment in the hands of national oil companies and national governments, particularly in the Middle East and in Russia, which are obviously less friendly than the friendly supply chains we'd prefer and we've relied on in the past.